Hey, it's Soleil, and this is episode 139 of the Orange Pill Investor. As promised, I'm going to rank the Bitcoin mining stocks in order of from a purely option selling perspective. And so I created a little spreadsheet to track this. I don't normally put all this crap on a spreadsheet. You can see I've already excluded Wolf. So we'll go over that. But I decided to just go ahead and whip up a spreadsheet because I'm gonna have to rank these, and I usually just ballpark, back of the napkin, mental math, this kind of stuff. But if we're gonna do an actual ranking, I figured I might as well pop up a spreadsheet so you can see, like, I'm gonna put in the price, and then if I was gonna sell an at the money put, like if I was gonna start the wheel strategy, then I've got, C2 divided by B2 is going to give you the return on that collateral. And this is assuming you're not using margin. This is a cash account. And so then if I go to the 1% ROI covered call strike, I'm going to put that covered call strike in here. And then whatever it's going to calculate how much call away value that is based on the strike minus the actual share price divided by the share price. And then since we're targeting 1% return plus this potential call away, those added up together is the total potential profit as a percentage for choosing that strike. And that the yellow highlighted columns are the ones where I'm actually entering numbers. Everything else is calculated. And so then if instead of going to the 1% strike, if I go to the strike where I can build in just 10% call away value, I'm going to put the amount of premium that I can collect here, and then it's going to calculate the percentage of premium based on the share price. And then the total potential here is the whatever the percent ROI is here plus the 10%. And then there'll be some other metrics to use as well. I usually look at liquidity, bid-ask spread, and then all of these stats here. So let's just take a look at Mara. This was after hours. So right now the price is 20.48. If I was to sell an at the money put, and keep in mind there's only 3 days left. So I would normally sell these on Friday, but since everyone is suffering the same midweek penalty, it'll be a fair test. I could go out to like next week or whatever, but it really doesn't matter. It will be a little bit on some of these cheaper stocks. It's going to be hard to get premium maybe. So we'll take a look at that as well. Maybe I should have done another column for what would I do if I went out to 45 days. But maybe that'll be for another day. All right, so selling it at the money is going to be 0.54. It's going to give me 2% ROI for 3.5 days. And then if I go to 1% ROI for the week on a covered call, that's going to be 1% of this. So if I go to $20, let's do the 22.5 strike. It's going to give me almost 10% call away. And so the 9.86% plus the the 1% call away is going to get us to 1086 potential. If I go to 10% call away, that's going to be an extra $2. So actually, it's the exact same one. So I can get 0.25 here. So it looks like the 22.5 is the winner here. You can see I've got two 23s and a 22. All right, let's take a look at Wolf. If I wanted to sell, and see, Wolf, I was kind of going like out to like 45 days, 50 days, because while this says you can get 8 cents, which would be 4% for the week, that's like, oh yeah, that's amazing. But if you look here, the bid-ask spread is trash. So there's 216 people trying to sell for 10, and there's 647 people trying to bid at 5. And so this 8 is not a real price. You know, the mid price is halfway between there, but you're not going to get it. If you want to fill, you're going to have to come down to the 5. So you're really only going to get 2.5% for the week. And so that's why Wolf is kind of disqualified for me right now. It's just too hard to get premium. Now, if I went out to like 52 days and tried to sell covered calls, I could do that. Like the $3 strike. I might be able to get a fill for 15 since it's halfway in between these, but no promises. So since the bid-ask spread is in increments of a nickel, and this is so cheap, you're going to get screwed. But if I had to, I guess I would come out here and try to sell the 15 for 50 days from now, but Wolf is no go. I'm just going to delete it right from the spreadsheet. All right. Right. Why am I not doing these in order? The hell is my other ones? Okay. I thought I had RIOT and stuff in here. RIOT. All right, same deal. If we're going to fill in at the money put, RIOT is 10.28 right now. I can get 0.18 at the money. So that's going to get you 1.75% ROI instead of 2.64 for Mara if I was starting the wheel. The 1% ROI strike on a covered call, I need to get 10, so I can go to the 11 strike. So the potential call away there is 7% on the call away, and plus the 1% ROI at the 11. So that's going to give up a total potential of call away plus ROI on the strike premium at 8, which is also inferior to Mara. If we go to 10% call away, that's going to be adding $1.25 to this. So we got to go to the 11.50 strike. I can collect 0.07 here. So the potential ROI and call away here is 10.6. So far, Mara is in the lead. And let's do HUT. HUT's trading at 9.03. If I was going to start the wheel and sell an at the money put, I could get 32 cents. So that's pretty darn good. Now, this is not quite fair as well because the price of HUT is actually very close to $9. So a lot of this premium is just because it's so close to the $9 strike, whereas the RIOT one is halfway in between the 10 and the 10.50. If RIOT was trading for 10.03, like this is trading for 9.03, then RIOT might look better this week. So you got to check these week to week depending on the prices and the strikes. Just because they're the best this week does not mean that they will be the best next week. All right, so if I try to get 1% on a covered call, that means I got to go to the $10 strike so I can get 0.09. $10 strike. Potential is 11.74, so that one's actually the best so far on the selling the put and selling the covered call. And if I go to the 10% call away, which is actually the exact same one, that's a $10 strike. But the premium there is at 0.09. Yeah. All right, CLSK. CLSK, I stopped trading because I don't like the liquidity on the bid-ask spread. It's not exactly liquidity, but it's the tighter the bid-ask spread, the better. Makes it easier to get in and out of trades. Reduces the amount of friction, the amount that you're going to lose getting a fill. So the price is $17.23 right now. I can get paid 0.48. So I can get 2.79% returns on my collateral for that. If I go to the 1% strike, that would be covered calls. Right here, the 19 strike. So the total potential getting 1% ROI is 11.27. They're all fairly similar. Well, 3 of the 4 are similar so far. If I go to the 10% call away, I got to add $1.70 to this, so that gets me an $19 strike. And I can get 0.18 at the 19 strike. So that gives me about 11% potential. All right, IREN. Let me slide that over. IREN's trading at, IREN's trading at 7.68. If I sell an at the money put to start the wheel, I can get 0.25, a little over 3%. Selling a covered call, if I go to the 1% return strike, that's going to be right here. That's the $9 strike. That is, whoa. That's not true. Hold up. Oh yeah, the 9%. Wow. Damn. That's a lot of potential call away. I thought that was a mistake. All right, if I only go to 10% though, that means I got to add like 75 cents to this, which would put me at like 8.50 strike. So I can get 0.13 here, and we have a new leader in that column. Again, though, I don't like the nickel increments, so we'll come back to that. So these are green because they're in pennies. CLSK and IREN are going to be not disqualified, but we're going to call them orange because they trade in nickels. Cipher Mining is trading at 393. Wait, did I finish IREN? Yeah. All right, cannot even get, is it because the liquidity is bad? I don't know why, but cannot even get anything at the money. Oh, because it's 393. It's too far to the 350 strike, so there's nothing even there. So this is not tradable. But if we go to the, well, really the only strike we can get any premium on in 1 week is the $4, and that would be 7 cents call away. So that's like what, almost 2%. So we're really not even able to evaluate this properly. But if I bought 100 shares for $393 and I sold a covered call, again, it's in increments of a nickel, so I would probably have to go to the $10 strike to get this filled. So I can make 2% ROI on a covered call, but that's only like 7 cents call away value. It's like another 2%. So this one's disqualified. Not even going to bother to rank them. All right, BITF is trading at 214. Selling an at the money put. So this isn't trading in increments of a nickel as well. So not loving that. But an at the money put is supposedly 0.3, which, for real? Oh Jesus! I went to 52 days because I was looking at this yesterday. This is gonna be trash. I was like, okay, that's amazing, but no. All right, yeah, there's nothing here. When you start getting under $10 a share, it's very difficult to get premium. So BITF disqualified. All right, and so to have something to compare to, let's check the big daddy of them all. So 1628 is MicroStrategy's share price right now. You can get 50.25 at the money. So this is what's hilarious. From a purely premium perspective, MicroStrategy is behind IREN and HUT, which I just kind of love that because you don't have to have enough money to get 100 shares of MicroStrategy in order to sell options and bank some profits here. All right, but if I go to sell a covered call at the 1%, it's gonna be way the hell up here. So 1% of this is gonna be $16. So right here, we'll do the 1770 strike. Total potential is about 972. And if I go to the 10% call away, that's going to be $163 plus the price here. So 63 would get us to 1700 plus another 100, 1800 strike. So the 1800 strike premium is 1373. And trying to get 10% call away would give us a total potential of 1084. So actually second worst on this list. But that doesn't mean that I would prefer to trade any of these other miners over MicroStrategy, because my assumption is that this total potential is much more likely to be achieved in MicroStrategy than the other tickers. I didn't really see any problems with liquidity on any of these. So let's just say for Mara, I want to sell covered calls. And we got tons of volume here, tons of open interest. Check the others. Tons of volume, tons of open interest. HUT, tons of volume, tons of open interest. Plenty of bids, plenty of asks. You're going to get fills. Let's just go right here. CLSK is tradable. I just prefer not to. Tons of volume, tons of open interest. It's just that the bid-ask spread is a nickel, which annoys me. IREN, not as much volume and open interest, but it's a fairly, heavily traded one. If you remember when we saw a couple of the other tickers, like there was just a bunch of 0.01s here, there just wasn't anything to be had. Like when you're around at the money and you're seeing 0.01s, that's not a good sign. But this is traded, heavily enough that you can make this work. I just don't prefer. So they all get passing grades for liquidity. These three, Mara, RIOT, and HUT, would be my picks for tight bid-ask spreads. You can get in and out of trades, and you're not going to lose money trying to get fills. And let's see. So let's compare. Selling at the money. Yeah, again, this is not fair because I had to go to the $20 strike. Let me check Mara again. You can see my bias coming out. $67. Yeah. So this is already, the price is fluctuating. Since the price has dropped down, this is now 0.67. So now that pumps Mara's ROI. So these things can change from minute to minute, not just day to day or week to week. The closer the share price is to the strike, it's going to pump the amount of premium that you can get, which makes sense. So for right now, it looks like HUT, then Mara, then RIOT as of today. If you're going to start the wheel and sell puts, if we look at earning 1% on our covered call strike, how much potential can we get? And in this case, it looks like IREN came out the best. Followed by, this is pretty much a tie, HUT and CLSK. Mara right behind, and then RIOT in last place. If we try to get 10% call away value, our total potential is very close. These will all pretty much get you very similar total returns, but the ROI, the guaranteed part at 10% is tops down here for IREN, then Mara, then HUT and CLSK, oh, not MicroStrategy, and then RIOT coming in last place. And this is going to be completely subjective. I mean, the numbers tell a certain story, but these nickel bid-ask spreads are disqualifying to me. So it's no surprise that these that these are the three that I trade. And looking at these, it looks like as of today, Hut looks like the winner, followed by Mara, and then in last place Riot. I don't know if Riot is affected by these offers. Someone mentioned to me that they put in an offer to try to buy, was it Bitfarms, the ETF? And so that will be interesting to see, like, if that offer is accepted, whatever they're going to buy the BITF holders out at, you'll see their stock price basically just go to that price and lock, just stay locked at that price. And then the covered calls will basically peg themselves to that price. So there won't be really any wondering about, oh, what is the price going to be? Everybody knows what the price is going to be. So that'll basically take options off the table for BITF if that's agreed upon. But a lot of times the company that acquires the other company, their stock actually goes down. So you pay more for the other company, and then the company that's buying that stock, their stock actually temporarily goes down. That actually happened to the software that I personally work on. They got bought out. So I'm not really totally sure what the implications would be for Riot, but BITF, I guess you could speculate. Generally, they get bought out over the purchase price. So if you wanted to speculate that the deal would get done, you could just buy some shares, I suppose, and then if BITF gets bought out for some amount of value over that, then I guess you could turn around and sell them and get paid off. But it's not really a play that I really make, so cannot really give much of an opinion. But so it looks like we're going to rank Hut 1, Mara 2, Riot 3, and then I guess IREN would be 4, like if I just had to. Somebody held a gun to my head and was like, okay, you got to trade it. Every single one of these, which ones you allocate the most to? I'd allocate the most to Hut, then Mara, then Riot, then IREN, then CLSK. All right. I hope that helps. You'll notice that this is just purely dollars and cents. I don't know which one of these has the most Bitcoin. I don't know which one of them has the cleanest energy. I don't know which one of them is using AI to do this, that, and the other thing. I don't know which ones. Hell, before the guy told me that Riot offered to buy BITF, I didn't even know. So I don't really follow the news on these. All I really care about is how much collateral do I have to put up to earn this much money. That's all I care about. And do I get the most money selling a put, selling a covered call? Do I want to build in a certain amount of potential that I can capture? Or do I just not care about that and I just care about the premium? These are the metrics that I use. And so some people will say, oh, well, you should look at the chart and draw some support and resistance, and that'll help you select your strikes, I guess. But I don't really have time for that. I just want to be as efficient as possible. And I'm not going to, I've already done my research in Bitcoin. So I'm assuming that as Bitcoin goes up, these go up. And until something disproves that basic assumption, my research on all of these guys is done. So IREN, I'm tempted to actually drop that to last place because it's only tradable now because it's pumped. And what if it doesn't stay pumped? Let's just go back a year. So if it goes back to $2.90, $4, it's going to be difficult to get premium again. So it's been, holy crap, came in at 15. So it's been up to, what, 10-ish? Oh, yeah, so it almost made it to 10. So it's a lot easier to trade up here, but there's no guarantee it'll stay here. So if this drops back down to 5, then it's going to be much harder to trade. So in that sense, I think I'm going to change my mind and I'm going to demote IREN, even though the pure numbers on the spreadsheet are pretty legit. It's just too hard to get premium on cheap stocks like this. And if this goes back down to $5 a share, that's too much of a risk for me. So we'll go HUT, MARA, RIOT, CLSK, IREN. All right. I hope that was a fun experiment, excuse me. And we'll leave it there for now. Be good, y'all.